Partner and head of policy research for Strategas, a Baird company. What are you telling investors today?
Well, the chances of the Republicans taking the House are 90%. The gains could be so large, 25 to 30 seats, that they're probably going to lock in that majority for not only the next 2 years, but possibly 4 years. That means no tax increases, little energy regulation, little health care regulation. The market generally will like that divided government. The Senate is obviously mixed, Sarah. So the question is, which way are the undecided voters going to turn? You can feel the market starting to position as if the undecided voters are going to turn to the Republicans. How do we know that? You could see it in stocks dedicated to immigration enforcement, which is a priority of the Republicans. You can see it in energy infrastructure, which will be a main priority if the Republicans have complete control. So the market, the forecasters, and the betting odds are all suggesting that there's a slight probability of the Republicans taking the majority. And if that doesn't turn out to be the case, the biggest sector with the rally will be the clean energy stocks, which have priced in some negative reaction of a Republican sweep so far.
So the administration doesn't, and the Democrats don't get credit for better than expected jobs, which it's been a string of good news on the jobs front.
Absolutely.
But I guess the inflation numbers on the other side, right?
That's right. The main driver of voter behavior is after tax, after inflation income. So normally when you have low inflation, you get a lot of jobs, you get a lot of income. Now you're getting jobs, but the income's being eroded by inflation. And the best way to think about this is the energy election. Gasoline prices, groceries, that's the driving issue for voters. And for a while, Sarah, that wasn't the main issue. But it came roaring back in September. The OPEC decision to cut production probably fueled it. Gasoline prices are $3.85 today. That's what's really driving the voter today. And that's what's going to lead to the policy implications if the Republicans are able to take advantage of that.
So there's also some noise about the debt ceiling if the Republicans gain control, because already we're dealing with very high levels of debt in this country and now a pushback against spending in an inflationary environment. What's going to happen there? What
investors need to know is that we're at the return of deficit politics. This is really the first time in 30 years because the net interest cost of interest is going up. And that's because interest rates are going up. And so now we have to feel the true cost of that debt. And that means that when we raise the debt ceiling, it's going to get meaningfully harder. The debt ceiling is being pulled forward into the first quarter. A new Republican majority would have a really hard time raising the debt ceiling immediately coming into office. They would demand spending cuts. We're likely going to see the debt ceiling get raised in the lame duck session of Congress right after the election in November and December as a way to diffuse the issue. If you're able to take that risk off the table, I think that helps risk assets in the first quarter.
You think the Democrats are going to be able to get that done?
There's a lot of talk. If this was last week, I would have said no. You're starting to see more and more people within the Democratic Party saying it might be better to do this to avoid being held hostage for spending cuts in the first quarter of next year.
On the other hand, I know nobody's in the mood for spending right now, certainly what we saw in the UK and on the inflationary front. But if we do go into a recession and it gets ugly next year, doesn't seem like there's going to be a whole lot of appetite to fight back with stimulus.
That's correct, right? So number one, there's not going to be an appetite to do it, and there's not going to be the fiscal capacity to do it. Okay, so what you got to do is figure out where you can help the economy in other places. Improving the energy infrastructure and getting more oil and natural gas into the economy and bringing down oil prices would act as a stimulus without pulling the fiscal policy lever. So you got to get creative in how you do it. And if you have too bad of a recession and you get to the end of next year, I think you'll start to see a little bit more appetite for fiscal policy, especially if inflation is coming down because of that recession. Most of those members of Congress are going to be up for re-election in 2024, and they're not going to want a bad economy in 2024. So we may have to eat our spinach in 2023. If it's too bad, I would expect to see some more candy at the end of the year.
All right, so you said that, by your metrics at Strategas, a lot of this is priced in terms of the shift toward Republicans taking both houses. Where do you guys see the opportunities within sectors?
So when I say it's 70% priced in, that means there's still 30% upside. The key sectors I would focus on right now: energy, healthcare, particularly biotech and pharmaceuticals, financials, particularly in the insurance industry and in the defense sector.
Why? Well, this is all good for them?
Less regulation. And again, the size of the Republican majority in the House is not only just a 2-year majority, it could be a 4-year majority. And that means that you're lowering the probability of a full Democratic sweep in 2024. You're creating some level of protection for those industries over the next 4 years overall. So I still think there's some room to go here. But a lot of it is starting to price in, and the market's starting to realize that the Republicans have a chance for a full sweep come Tuesday.
Dan Clifton.